𝗕𝗃𝗪𝗪 still continues to affect Bitcoin's price with a self-fulfilling prophecy. Essentially, we see Bitcoin continuing to get rejected and push further down in price, dropping by 7.8% yesterday. In today's video, we're going to be taking a look at the technical analysis on Bitcoin, showing my short and medium time frame expectations on the BTC price. As I get into today's video, if you do find it useful and informative, smash that like button. If you're new, subscribe, and let's take a look at what's going on with BTC. Okay, so here we have Bitcoin paired up with USDT. We're on the 1 hour Binance chart here, and you can see that we once again saw rejection on the 50 SMA, 50 EMA scenarios just up here yesterday. This was 1200 hours UTC and 1300 hours UTC, and that led us into a big drop down by 7.8% in a single day. This low coming in yesterday was $52,550. So 𝗕𝗃𝗪𝗪 continues to be a bit of a problem, right? But obviously 𝗃𝗪𝗪 in itself is a nice, easy kind of way to kind of articulate a kind of nickname for the month of September, but it's also something that people can just kind of rely on and say, look, September is always a bad month, right? September is always going to be a bad month, right? But actually what they're really doing and telling you here is it's a self-fulfilling prophecy, because people are talking about September being a really bad month historically for BTC's price action. They go off and sell their assets because they believe that it's going to be a really bad month. And then such, what's going on here with enough people doing that, you kind of create this self-fulfilling prophecy where you believe Bitcoin's price is going to go down, so you sell off your assets, forcing Bitcoin's price to the downside. Essentially, what we're seeing here is lack of demand for buying and an increase in the selling pressure. So increase in supply, decrease in the demand, and well, hey presto, you end up with this recipe for a bigger move to the downside. And so there's been some huge opportunities for shorting the market, right? I've been talking about shorting the market for a while. We were hoping to gear up for a bit of a run for the first couple of weeks of September, but it looks like everything that's going on with this kind of 𝗃𝗪𝗪, this self-fulfilling prophecy, alongside, of course, the Federal Reserve's monetary policy changes, which are due on the 18th of September, is leading us into more bearish times. Now, obviously on the channel, we've been talking about how Q3 2024 was going to be a pretty bearish time for crypto, and obviously this is in line with our expectations. We've been forecasting a Fed pivots for probably about 18 months. About Q3 2024 was going to be when we saw the Federal Reserve cut their interest rates, and that historically has been very negatively impacting the stock market and impacting the crypto market in relation. Now, what we've seen going on here is kind of the market trying to price in my opinion, that Federal Reserve interest rate cut. Well, obviously the US Fed, they are a little bit behind. They've been lagging behind the ECB, the European Central Bank. They've been lagging behind the Bank of England, who already cut their interest rate. So the market already knows that interest rate cuts are coming, and that historically has meant that the markets are to bleed out. So I think the market is trying to predict and trying to price in how low Bitcoin is going to go during that move. So 𝗃𝗪𝗪 obviously being a self-fulfilling prophecy alongside the Federal Reserve interest rate cuts, we've kind of been expecting this to happen, and as such we've been able to kind of take advantage of the market, specifically through shorting. We were hoping to see the occasional bounce. That hasn't happened yet. The constant rejections on the 50 EMAs, 50 SMAs are quite interesting. We did see a bit of a push here, tried to find brief support, lost it, and we could have shorted again. Shorted also over here at 1400 hours on Thursday, and shorted yesterday as well at 1300 hours. This would have been a great opportunities to kind of basically dollar cost average into Bitcoin if you want to, but also just short the market and take advantage of that volatility. And of course, if we are to be trading, we're going to be trading on BitGet, Blowfin. These are my go-to platforms. They're linked in the description below if you haven't yet got accounts for them. Check them out. Some great sign-up bonuses, some great campaigns, so get yourself on that if you haven't done so already. And yeah, I don't think you'll be disappointed by what you find down there. Very, very good. So let's take a look at the structure, right? What do we see? Well, we can see Bitcoin here has aggressively moved down, and this move to the downside does actually look like it hasn't finished yet. Or I say it does. It doesn't look like it's finished yet. It looks like we have further moves to the downside. This is an appearance of a WX, Y, X, and Z. So we have the W, the X, the Y, the X, and then we'll look for that Z. So the Z wave in itself is going to be an interesting one. We look for this price to come down into the low range down here, 54.25, up a little bit higher, up towards that 50 level. So we'll be looking for a retest of that existing low at 50,000. 583, okay, approximately. So you can see here that's where the Z wave was likely to go. But this doesn't necessarily mean it's over yet either, because this also has a very interesting structures occurring in here as well. So we could be looking at a much bigger macro move to the downside. So on your hourly chart, we'll keep it really fine to the smaller time frames right here. We will be looking for a pullback, a retesting around $52,000 to $50,000, in line with kind of those expectations on these structures. Now, smart money concepts, if we go ahead and actually turn the right one on, there we go. You can see equilibrium is right there on the 50 EMA, 50 SMA. Fair value gap also created. So it's possible that maybe we get a relief rally to 55,000 upwards, and maybe a little bit more to 55,800, but ultimately rejection is highly probable here. We're in bearish structures as indicated here already on these timeframes. So again, no real major changes from that. Still looking for more slippage to the downside on BTC's price action, although there might be the occasional relief rally. We should still expect more downside pressure, price pressure for BTC. Okay, so on the smaller timeframes, yeah, it's kind of all to play for a little bit. Still be looking for further volatility, further moves to the downside, looking for support levels. So let's go ahead and roll this up into a daily time frame. On the daily time frame, we're able to kind of take a look and take stock of the bigger macro picture. I'm just going to go ahead and clear out some of this noise so we don't have it all clogging up the daily or weekly charts. Just go ahead and remove those. And so in here, you can see the expectations that we have are down here into that low range. That's obviously coming into this previous area of resistance come support. Okay, this particular area is where we tapped into before, 49,000 to 50,750. Okay, so we know that this is an interesting range for previous support. So it'd be interesting if we come down there. If we lose $49,000, guys, then we, of course, the previous area of consolidation is the main focus, 40,000 to 44,700, right? We've been talking about this for a while, and there's a slightly refined area down here as well, 40,295 to 43,800. So we know that we've been targeting this. We've been talking about this for a while now. This progression to the downside does follow the idea that we have a three-wave drop here. Okay, obviously our minimum expectation is $49,000, but we expect a new daily lower low to kind of spook the market, shake out some of the weaker hands and all that kind of stuff before we get into those next big runs. Now, one of the things I do want to kind of point out is that although the market is bearish, this is something that we've been talking about and expecting for a while, which means we're not scared, we're not, overly concerned about the price action of the market. It's not doing anything unusual, and there's obviously going to be lots of different influencers across various different social media platforms kind of telling you, you might as well leave crypto, it's done, the bull market peak is in, come back in 18 months, all of that kind of absolute nonsense. And well, for the most part, although they kind of feel that they probably have a point to it to a degree, they're not actually giving you very good information, in my opinion. And the reason for this, if we come back into the charts, is that the candlestick nature here, if you're reading the price action, if you're not just, don't look at an indicator only tells you what's already happened, not telling you what's going to happen, but the price action analysis tells you a very clean story over what is going on here. Okay, the market has been in a liquidity extraction mode. Okay, so we have a high liquidating the shorts, we have a low liquidating the longs, and the process repeats itself over and over and over again. Okay, so what we're looking at here is an overlapping nature of candlesticks. This tells us that this is no trend. This is not a trend to the downside. This is a continuation pattern. When you see stuff like this happening, it shows us that the market is just about extracting liquidity. It's not about dumping the price of the market. It's not about, the price of Bitcoin, going down to, $30,000 or $20,000 or anything like that. It's not a trend to the downside. This is basically a pit stop whilst you wait to build up momentum and reset the buying behaviors. Now, at the moment, liquidity is being extracted because there isn't a lot of liquidity in the market, right? So your kind of market makers, your whales, your liquidity hunters are basically looking for how can they profit? How can they trade Bitcoin and extract liquidity? So they go to these areas and they are finding buy and sell order blocks and liquidations on the longs and the shorts. And this is how they kind of take advantage of the market, by pushing the price towards the liquidity. Okay, so basically they do this, they extract the money from the market and so forth. Now, this overlapping nature tells us that we're in no trend, but we're in a continuation pattern. And if we zoom out, and this is really important because I know a lot of people, they may look at this year and they go, look, from March 2024 was a peak, up there at 73,000, and this pattern is kind of showing us that, we're done, the bull market peak is in, we might as well go away for 18 months and come back, right? That's what people are telling you. But if you zoom out of this, you can really take it into consideration as to kind of what this pattern actually means. It's a larger pit stop. It's taken some time because the Federal Reserve haven't been, they've been reactive rather than proactive with their interest rates. And as such, the economy slowed down and so forth. And we find that the liquidity has slowed down quite aggressively. Okay. And as such, what you find is there isn't a lot of liquidity for buying. So price here is just consolidating around, hunting out, trying to shake out some of the weaker hands and extract some of the liquidity from the market. But what happens from here is this big breakout, because this is a continuation pattern, which basically means we're just continuing sideways, slightly kind of decreasing a little bit, but nothing too major, and we're going to continue what led into it. So a continuation like this breaks out towards our expectation of a minimum of $100,000. Now I do see the potential here for $135,000 for BTC by the time we get to the peak of the bull market, which will be 2025. And I've done videos on why I think that, why the US election is kind of key to the stock market and Bitcoin's price cycles. It's not to do with Bitcoin halving event, in my opinion. It has absolutely everything to do with the electoral years over in the US and everything to do with the monetary policy from the Federal Reserve. And if you actually correlate those into Bitcoin's price action, as I have done on the channel, then you can see that actually next year should be a bull market peak, as it has done every single time so far. If history repeats itself, as people often like to think, then next year is going to be a bull market peak, which means going away for 18 months probably isn't a good idea, is it? Because you're going to end up having to buy Bitcoin up at these highs rather than actually buying them down at these lows of $40,000. Leaving crypto right now would be a very bad idea, in my humble opinion, because you want to be accumulating those altcoins as they go into new bear market lows right now. Okay, Bitcoin's consolidating down nicely. Bitcoin is at some great prices, but the actual value comes in from those altcoins that are going down into incredibly low prices. Some of them are 18, 90% down from where they were in March. And that is really where the power of right now really kicks in, right? The opportunity for accumulation is now if you have the funds to do so. And this is where the billionaires and the really wealthy individuals understand the markets very well. They can extract the liquidity, come out of the market, and then they'll buy the fear from people who do not know what happens next. But what's your thoughts on all of this? Let me know in the comments down below, or join us in our free Discord server. We'd love to hear from you. And if you haven't done so yet, guys, check this video out right here. It's not one you're going to want to miss.